I'm your host, W. Wordsmith. Welcome to my first episode, where we will be exploring the world of accounting with our special guest. None other than Accounting Principles, written by Jerry J. Wigand, Paul D. Kimmel and Donald D. Kiso. I'm excited to dive into this topic with all of you. To kick things off, let's start with a basic question. So what exactly is accounting?
According to me, accounting is defined as the financial information system that consists of three basic activities. It identifies, records, and communicates the economic events of an organization to interested users.
But why is accounting such an important subject to learn, even if you don't plan on pursuing a career in the field?
Actually, accounting is the language of business. And without understanding it, how can a businessman read financial statements? And without reading those statements, he can't truly know his business. Here I want to refer a quotation of Harold Janine, the former chairman of IT&T. To be good at your business, you have to know the numbers, cold. In fact, many successful business leaders, such as Phil Knight, the founder of Nike, and Arthur Blank, the co-founder of Home Depot, both chose accounting as their undergraduate degree because they wanted to understand what was happening financially to their organizations. And it's not just business leaders who need to be financially literate. Many companies, such as Cliff Bar and Company, value employees who can read financial statements. Cliff Bar was able to create a culture of financial responsibility and improve decision-making throughout the organization. And they did this through employee stock ownership planning. They call it ESOP, and open book management programming.
So students, whether you plan on becoming an accountant or not, learning accounting can help you understand the financial aspects of any business and make better decisions in your career. And in this course, you will learn how to read and prepare financial statements and how to use basic tools to evaluate financial results. Let's move to our second segment. So, Mr. Accounting Principles, as you said, three activities are involved in the accounting process: identification, recording, and communication of economic events. Can you tell us how businesses identify these economic events?
Of course, Wordsmith. Economic events can be identified through different means, such as through business transactions, exchange of goods and services, or changes in the business environment. When a business engages in a transaction, it creates an economic event that needs to be recorded.
That's interesting. So, how these events are usually recorded?
Recording, or if we call it bookkeeping more specifically, involves chronological recording of events in a diary or journal, and then classifying and summarizing them in a ledger.
So is there any specific format of this ledger other than the chronological order of events like you just mentioned?
Talking about the ledger format, there is no specific instructions, and every institution has its own unique one. But usually it is in a way that can be easily understood and interpreted by the employees of that institution through communicatio.
I see. So at the end, these records are communicated for analysis and interpretation.
Yes, Wordsmith, you are absolutely right. The final event consists of communication to the interested users through accounting reports, such as financial statements. The data is presented in a standardized way to make it easy for users to compare, analyze, and interpret the information. This allows interested parties, such as investors and creditors, to make informed decisions about the business.
Thank you, Mr. Accounting Principles, for explaining these concepts to us. It's fascinating to see how these activities work together to create a complete picture of a business's financial health. It's time for a very short break. Stay connected. We will be right back after this.